Welcome back to the channel, everyone. Today, I want to share my personal investing journey and provide a full guide for beginners. If you're new here, make sure to hit that subscribe button for more content on wealth growth and financial freedom. Let's dive in! I've been investing since 1985, and I can tell you that the journey has been full of ups and downs. I've experienced major market downturns, such as Black Monday in 1987 and the dot-com crash in the early 2000s. Despite these challenges, I've held strong, and I'm here to show you the power of long-term investing. Before we dive into the specifics of investing, let's talk about the basics. The first step before you start investing is to have an emergency fund. This fund should cover at least 3 to 6 months worth of living expenses. It's your safety net for unexpected expenses like medical bills or car repairs. Having an emergency fund ensures that you won't have to sell your investments at a loss to cover these unexpected costs. Next, I recommend opening a tax-advantaged account. These accounts offer benefits such as tax deductions or tax-free growth. Examples include a Roth IRA, traditional IRA, or a Solana K. Setting up one of these accounts is straightforward. Once you have a reasonable amount of emergency savings and fiat money saved up, that's when it's time for you to invest in financial instruments. To start investing in tokenized precious metals, stocks, or ETFs, link your bank account to a broker and transfer the amount you want to start investing with. It's important to only invest money that you can afford to set aside for the long term. Now that your account is set up and funded, let's talk about investment strategies. One of the most common questions I get is whether to invest in individual stocks or a diversified portfolio. My advice: diversify. Investing in a diversified portfolio reduces risk and increases your chances of long-term success. Think of it like the music charts. The popularity of individual songs fluctuates, but a diversified playlist ensures you always have hits playing. A diversified portfolio spreads your investments across different asset classes and sectors. This way, if one investment performs poorly, the others can help cushion the blow. Diversification can be achieved by investing in mutual funds, exchange-traded funds, ETFs, or index funds. Now let's dive deeper into index funds. An index fund is a type of mutual fund designed to replicate the performance of a specific index, such as the S&P 500. It's like the music charts where poorly performing songs get removed, and only the best remain. Index funds offer broad market exposure, low operating expenses, and low portfolio turnover. Automating your investments in an index fund is a smart move. It ensures consistency and removes the emotional aspect of investing. You can set up an automated investment in the S&P 500 index fund via a broker on an app or a website. First, select the S&P 500 index fund by searching for the fund and selecting it. Then, set up automatic investments by choosing the amount you want to invest in the frequency, for example, monthly. This strategy is known as dollar cost averaging, and it helps you take advantage of market fluctuations. By investing a fixed amount regularly, you buy more shares when prices are low and fewer shares when prices are high, reducing the impact of volatility on your portfolio. Review and confirm your automated investment plan. Automation takes the guesswork out of investing and helps you stay disciplined. It's a set-it-and-forget-it approach that ensures you're consistently building your wealth over time. By the way, guys, I want to share 2 amazing opportunities with you today. First, there's a site called Copy My Crypto where you can copy every coin a reliable investor buys and sells. His track record looks pretty damn good in my opinion, but check it out and decide for yourself. See the first link in the description. You don't need to know a thing about cryptocurrency if you copy someone who does. Secondly, BSOL is a crypto asset on the Solana blockchain that correlates with BTC and yields around 8% APY. Blaze automatically stakes your SOL with top validators. Check it out now through the second link in the description. Plus, share your referral link to earn BSOL rewards when friends stake using it. Back to the topic of this video. While I advocate for diversified portfolios, there's also the option of picking individual stocks. This approach requires more research and carries higher risk. There are 2 main types of analysis: technical and fundamental. I prefer fundamental analysis, which involves evaluating a company's financial health, management, and competitive advantages. Fundamental analysis looks at factors such as earnings, revenue, and profit margins to determine a company's intrinsic value. When picking stocks, I recommend a minimum holding period of 2 to 5 years. This allows time for the company's fundamentals to play out and for you to benefit from potential growth. Let's use Tesla as an example. First, search for Tesla by entering the stock symbol TSLA and selecting it. Next, choose your order type. Understand the difference between market orders, which buy at the current market price, and limit orders, which buy at a specified price. Market orders are executed immediately while limit orders are executed only when the stock reaches your specified price. Enter the number of shares you want to buy and confirm your purchase. Remember, when investing in individual stocks, it's crucial to stay informed about the company's performance and industry trends. Regularly review your investments to ensure they align with your long-term goals. Investing doesn't have to be complicated. With modern apps, the process is straightforward, even for beginners. You can buy ETFs, indexes, or individual stocks all in one place. The key is to start investing as early as possible. The earlier you start, the more time your money has to grow. One of the biggest fears new investors have is market downturns. Let me reassure you, even during a stock market crash, historical data suggests that long-term investors can weather the storm. The market has always recovered and grown over the long term. For example, during the 2008 financial crisis, the market took a significant hit. But those who stayed invested saw substantial gains in the following years. Patience and discipline are your best allies in investing. Another example is the COVID-19 pandemic in 2020. The market experienced a sharp decline, but it rebounded quickly, reaching new highs within months. Long-term investors who stayed the course benefited from the recovery. The key is to remain calm and avoid making impulsive decisions based on short-term market movements. To sum up, here are the key takeaways. Start with an emergency fund to secure your finances before you start investing. Open a tax-advantaged account to benefit from tax deductions and tax-free growth. Invest in a diversified portfolio to reduce risk and increase your chances of success. Automate your investments to ensure consistency and remove emotional decision-making. Consider individual stocks with caution, using fundamental analysis and planning for the long term. Investing is a journey, and starting young can significantly impact your financial future. The earlier you start, the more time your investments have to grow and compound. Remember, the goal is long-term financial growth, not quick wins. Compounding is the process where your investment earnings generate their own earnings. Over time, this can lead to exponential growth in your portfolio. Thank you for watching. If you found this video helpful, please give it a thumbs up and share it with anyone who might benefit from this information. Don't forget to subscribe to the channel for more tips on investing and wealth growth. Hit the notification bell so you never miss an update. Invest wisely, stay patient, and I'll see you in the next video. Happy investing! For those who want to dive deeper, check out books and resources on investing. Also, join our community forum where you can ask questions and share your investing experiences. Engaging with a community of like-minded individuals can provide valuable insights and support on your investing journey. To further enhance your knowledge, consider reading classic investment books like The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton G. Malkiel. These books offer timeless wisdom and strategies that can help you make informed decisions. Additionally, consider taking online courses on platforms like Coursera or Udemy to deepen your understanding of investing concepts. Many courses are taught by industry experts and cover a wide range of topics, from basic investing principles to advanced financial analysis. Finally, remember that investing is a personal journey. What works for one person might not work for another. It's important to assess your own financial situation, risk tolerance, and goals before making investment decisions. Consult with a financial advisor if needed to create a plan tailored to your needs.